Hello and welcome back to the channel. Now this is another exercise case concerning value-added tax, and well, why should we start with a long introduction? So just let's have a small look on what the task will be. The Importer GmbH has established its business at Munich, which is in Germany. And the GmbH asks you now for the correct treatment of the following events under German VAT law. The first event is an employee of the GmbH went to Switzerland and bought and brought an air conditioner for 500 euro, and the employee paid the price at the business location or shop in Switzerland, took the air conditioner and drove with it to Munich. At the customs control, the employee paid the importation VAT in the name of her boss, that is, in the name of the GmbH. A copying machine was ordered by the GmbH from a supplier in Switzerland in June and delivered in August. The machine was sent by the deliverer to the address of the GmbH in Munich. The haulier who undertook to transport the machine declared its importation on the border in the name of the Swiss firm, paid the VAT naturally on the border 190, and the net price of the machine was 1,000. And last but not least, we also ordered a custom-made production machine in September, again a Swiss producer, for now 500,000 euro. The machine was delivered at the end of November, and that worked in the following way. The Swiss supplier carried all the parts of the machine with lorries, or however you call it, to Germany, declared them for importation on the border, and finally assembled the machine from all the parts in the building of the Importer GmbH in Munich. That, ladies and gentlemen, is our task. So we have to work on it step by step, giving every logical step which you need to arrive at the final solution. Have to give references and proofs for every step we take, and so the only thing we have to do now is to begin with the solution. So let's think about that and begin with it. So let's first begin with some preliminary remarks, probably things which we can use always. The I am Porter GmbH is an entrepreneur. That can be seen from paragraph 2.1 sentence 103 of the USDG, because it is independent, that can be assumed, aims at revenue, and has a constant or sustainable activity. So now let's go to the events which happen here, and event 1, B1 is we have a contract we have a contract between a Swiss supplier, Swiss supplier, and there is an air conditioner, and the customer who buys it is the Importer GmbH at Munich. Let us design that a bit better so that we see who is where. Let's say that's Zurich or another place in Switzerland. That is now what happens, and this brings us to the question of taxability. Well, we do not have to check number 4, importation VAT, because that has already happened. The case tells us the VAT was paid on the border. But what still has to be checked is number one. Is the transaction as such also liable to regular VAT under paragraph 1, number 1 USDG? That's the question, and that is what we have to check. The first thing is it made by an entrepreneur? And the entrepreneur who is meant by this requirement or this condition is the Swiss supplier. 1 sentence 1 and 3 says he or she is an entrepreneur, sells machines. See paragraph 2, 1 sentence 3. So within his or her enterprise, and the answer is yes, it's either the core or main activity, or it is at least an ancillary activity. So yes, that is covered by the entrepreneurial activities. Is it for consideration? And the answer is yes. Price is paid. You demanded delivery. Yes, the air conditioner, sorry, let's call it plainly an air conditioner, is a tangible good. And there is a change of the position like an owner. 3.1 USDG is fulfilled, so it is a delivery. The place of delivery to test is first 3.6 USDG. That is where the movement of the good towards the customer begins. That would be Zurich. But to test is also paragraph 3.8 USDG. Place is shifted to the inland if the supplier pays the importation VAT. This is clearly here not the case, because the employee of the customer pays the importation VAT. So this rule is not applicable. So place of delivery is Zurich, or whatever place in Switzerland it should be. This is not a part of the German inland. So this event is not taxable at all over and done with. What we could have a look on is perhaps the paragraph 3.6 and 3.8 again, just to be sure. We cited them, so we should check them if they are really saying the things which we want them to say or which we have in mind. And you remember that when it comes to an import, apart from the importation VAT on the border, there is also 1.1 number 1 to be tested, because every rule has to be tested independently. So it can be that two rules apply at the same moment. And that is exactly what we have to check here. We found out in this particular constellation it's not taxable here, but we need to look it up just to be safe and sure of our solution. Okay, here now you see paragraph 3.8, deliveries and services, the place of the place of a delivery, if during the dispatch of a good which is delivered, if during the dispatch, comma, a good which is delivered gets from the third territories into the inland, then the place of delivery is deemed to be in the inland if the supplier or his representative is legally responsible for the payment of VAT and the border. That did not happen here, so that was not applicable. So the special rule can be denied, and we fall back on the basic rule that was 3.6. Where is it? Here. And that is the well-known and familiar rule again. If a good which is delivered is dispatched or moved, transported by the deliverer, the customer, or someone else who acts on behalf of one of the two, then the place of delivery is where the dispatch or where the transport or the movement of the good towards the customer begins. Yes, and that is definitively Zurich, and Zurich is not a part of the German inland. That is well known to everybody who knows where Switzerland is on the map. So indeed our first case was evidently correct. Good, let's then go to the second event. So event number 2. Here we have a Swiss supplier. Let's again imagine he or she is from Zurich. And that is now a copying machine. And that goes to the German GmbH. Let's change the layout a bit so we see what happens. The price is 1,000 and the place where the GmbH is Munich. And yeah, so that is what happens. We have to begin with checking taxability. We do not have to check importation VAT on the border. That has, according to the case, already happened. So we have to check if paragraph 1.1 number 1 USDG applies to that event. And for this, we need an entrepreneur. The seller must be an entrepreneur. The seller, the Swiss supplier, is an entrepreneur. Because paragraph 2.1 sentence 1 and 3 does not say that the entrepreneur must be a German entrepreneur or German-based entrepreneur. It just says it must be an entrepreneur. So within the range of the enterprise activities. And the answer is yes. Paragraph 2.1 sentence 2 says everything which belongs to the enterprise. The main activities and the ancillary activities, all that is covered by the term range of the enterprise. Has it been done for consideration? And the answer is yes, a price is demanded. So it's not for free. Is it a delivery? And here again the answer is yes, paragraph 3.1. I hope you know that by heart in the meantime, because copying machine is a good and sale is a transfer of ownership or of economic ownership. Sorry for the typewriting. And now what we need next is the place of delivery. And here the basic rule would be paragraph 3.6 sentence 1, because that is always the basic rule when the good is moved during the delivery, where the movement towards the customer begins. That would be Zurich, but to test is again paragraph 3.8 USDG. We have a good which crosses the border from non-EU into the inland, plus the supplier or his employee, his representative, his agent pays the importation VAT. That means then the place of delivery is deemed to be in the inland. And that means all the 5 requirements are fulfilled. And that means that event is not taxable in the inland. I'm so sorry. Okay, now we come to the question of the tax exemption. Paragraph 4. And then you see no rule is applicable. You can check this if you have a thorough look through the whole paragraph 4. There is approximately 28, 29 or 30 numbers, plus some A and B numbers in between. It's a very, very long list, but I can assure you a copying machine does not arise or occur anywhere on the list. Furthermore, it cannot be a tax-free export because this is not an export, this is an import. This goes from Switzerland to Germany and not the other way around. So no tax exemption. The tax base, paragraph 10, 1, sentence 1 and 2 USDG, everything which is paid. That's net price plus VAT. And if you make a contract with a net price, then the supplier can always add the VAT, which is due under the law, additionally on top. So here, that would be 1,000 plus 190 minus 190. So you could also skip that. Net price 100,000. Tax rate and tax amount. Paragraph 12.1 says it's 19% because paragraph 12.2 does not apply to copying machines. So the tax is 19% on the net price of 190. The taxpayer is the supplier, the entrepreneur. 13A number 1. So the Swiss seller. That means that the Swiss seller has also to register for VAT as regular entrepreneur in Germany. Arisal of the tax. At the end of that preliminary declaration period during which the delivery was made, 13.1 number 1 USDG, and this is here end of August because the delivery happened in August. Paragraph 13b, a special rule, does not apply here because that would only apply if a working contract had been treated as a delivery, and this was not a working contract here. It was not custom made, but a standard machine, standardized product. Okay. The invoice. The Swiss needs a German VAT number, needs to follow all German rules, and needs to issue an invoice complying with all German VAT rules for invoices. Declaration duties. The Swiss supplier has to hand in a regular German VAT declaration. Do we have peculiarities? We don't know. There is nothing mentioned in the case And if there is input tax claims, yes, the GmbH can claim input tax for the acquisition, yeah, of the copying machine for its enterprise 15.1 number 1 USDG if and when the Swiss supplier has given it a regular, correct invoice confirming the VAT amount contained within the gross price. Seems to be perfect. And so we dealt with this transaction too. You see the importance of that paragraph 3.8, and what now has to be done is only the next and third event. The custom-made machine sold by the Swiss producer. Movement of the good. The machine first began to exist in Munich when it was assembled there. Before, only parts existed, and only parts were imported. Then the machine stayed at the same place. So a case of delivery without a movement, 3.7 USDG. After we have seen that, we can now test taxability. To test is again paragraph 1.1 number 1 USDG. We have an entrepreneur. Yes, the Swiss seller is an entrepreneur. That acts within the scope of the enterprise. The answer is yes. Paragraph 2.1 sentence 2 USDG says, okay, that seems to be their business, and it is at least related to their business, so the connection is sufficient enough. Yes, they demand a price. Now, is it a delivery or is it a service? And the answer is it is a delivery 3.1 because the machine is a good, a tangible good, and selling is a change of ownership, or change, to be precise, of the position like an owner. You know, it does not depend on legal ownership. You could also steal something because the decisive position is not the legal name of owner, but that you have the full position and rights of an owner under usual circumstances. Now we need the place of delivery, and that is paragraph 3.7 USDG, where the good is when ownership changes, and that's Munich. Paragraph 3.8 does not apply because the good does not cross the border during the transaction, but only the raw material or parts needed to create it. And that is not what the law talks about. So 3.7 remains totally unmodified. The place of delivery is Munich. All 5 conditions are fulfilled, so the event is taxable in Germany. Now, number 2 will be, is there a tax exemption? You have to check paragraph 4, and you will know rule. You will find no rule which applies. So it's fully liable to tax. So the tax base is paragraph 10, 1, sentence 1 and 2 USDG. The net price 500,000, but now that seems to be the price 500,000. It's not called a net price here. Minus VAT included therein. Assumption, usually the price which is in a contract is the gross price. You have to pay a gross price, and if you want to deviate from that rule, you will have to make a remark concerning that in the contract, or it must be a custom within the trade that you always agree only on net prices. But if we assume that this is indeed what is paid, 500,000, then it must be a gross price. And then the net price would be 100 out of 119 of 500,000. That would be 420,168.06 euro. The tax rate and tax 19% because of 12.1 USDG, because paragraph 12.2 does not apply to custom-made machines. So the tax is 19% on 420,168.06, and that is, let me have a look on my calculator, that is 79,831.90. Let's round it up, €4. The taxpayer, that's now interesting. You know that the taxpayer is usually the deliverer, the supplier, but there is also a rule that when you have a foreign deliverer, a foreign enterprise owner, then the German legislation prefers to make the inland customer the taxpayer, because that's more convenient for all the persons involved. And so there will be now a big surprise. Let us have a small look to paragraph 13b, if it might apply. Now, concerning paragraph 13b, the first paragraph and the second one contain the list of things to which paragraph 13b, so the so-called reverse charge rule, might be applied. 13b1 is only about services. That cannot be our case. 13b2 is a long list of things. Now, working contracts regarded as a delivery and other services rendered by an entrepreneur from abroad. Now, exactly what we had, a custom-made machine is a working contract. That means, or a work contract, you have to produce a custom-made specific item, and this is a delivery. In these cases, 13b2 says, yes, I apply if the entrepreneur is from abroad. We have, in addition, to check if the customer also is a potential taxpayer, because 13b1 and 2 only definitively apply in cases where the customer is the right kind of person, so where the customer is familiar with VAT rules and so can be chosen as a good taxpayer. Indeed, in cases mentioned in paragraph 1 and in paragraph 2, numbers 1, 2, 3, then the customer is the taxpayer if he is an entrepreneur. Yes, that's our case. So here the German GmbH would be the taxpayer. That is what we can already conclude from this nice part of 13b. Now we can write that down. 13b number 1 plus 13b5 sentence 1, taxpayer is the German importer GmbH. Now that entails a very, very drastic consequence, because then the price paid to the Swiss producer cannot contain VAT, so it must be net, because the customer pays the VAT directly to the fiscal office. So the 500,000 which are here paid to the Swiss producer cannot contain VAT. So our assumption here was wrong, brutally wrong. So this is a net price, because VAT is paid additionally by the customer to the fiscal authorities. See below paragraph 13b. So tax base 500,000. Now that makes life a bit more simple. 500,000, so that's 95,000 euro. Okay. The arisal of the tax. You probably remember that this was also, in cases of paragraph 13b, regulated in paragraph 13b. So let us have a look on what 13b1 or 13b2 says, and you probably remember that 13b1 and 13b2 in the German legal text regulated the arisal of the tax in a different way depending on which of the two paragraphs applies. So we need a very close look now. Yes, and so if we read the German current version of 13b2, we see that for the following taxable and non-tax exempt transactions, the tax arises with the issuing of the invoice. So when the invoice is made, at latest at the end of the first full calendar month following the effectuation or the end of the transaction in place. So that is what we need to take into account when we try to solve this case. So the date of the invoice, or at latest the end of the first full calendar month after the delivery was made. So what we have here is the date of the invoice, paragraph 13b2, USDG, or at latest the end of the first full calendar month after the delivery. Now the date of the invoice is here not given, but at latest 31st of December, because that is the end of the first full calendar month after the delivery. So if the invoice is issued earlier, then we have that nice problem that we have to pay earlier, but if not, then 31st of December would be the decisive moment. Anything concerning the invoice, ladies and gentlemen. The invoice must be about a net amount, because a supplier who does not collect and pay VAT cannot confirm the reception of VAT. That is something which you can find somewhere in paragraph 14a of the USDG. There must be a hint to paragraph 13b, that's also paragraph 14a USDG, because otherwise people were highly puzzled if they receive an invoice without any VAT and without any explanation. Now, declaration duties. As the taxpayer is the GmbH, only the GmbH has to declare the event. Peculiarities, for example, was an invoice issued wrongly? No. 7, are there input tax claims? And yes, the GmbH can claim input tax for this event under the usual circumstances. Now there is not an invoice mentioned here. Usually you need an invoice, but in the case where you paid the VAT yourself to the fiscal office, then the law doesn't insist in the existence of an invoice. So in cases of paragraph 13b, you can claim input tax refund under 15.1 number 4 USDG, even if there is no invoice. The only condition is that you obtained a delivery or service which was meant for your enterprise activities. We should still check this before we are on the safe side. So here is now paragraph 15.1. Number 1 is the usual rule. If you have a gross price paid, and this is not our case, but 15.1 number 4, the tax for transactions named in paragraph 13b1 and 2 which have been received for your enterprise. And you see there is no condition which requires the existence of a formal invoice. The only thing which you need to prove is you received a delivery or service which was meant for your enterprise activities and which was taxed under 13b1 or 2 by yourself. So indeed, our friend here could reclaim that money. Okay, that's it. So let us shortly sum up what you could learn here in this exercise case. The first case was a very simple importation case. That meant nothing else than a good crossed the border. The border control authorities just took the importation VAT, and that was everything. The Swiss supplier was not liable to German tax. In addition to that, because everything had been dealt with sufficiently, the regular VAT, that is 1.1 number 1, did not apply because the place of delivery was in Zurich and that is not in the inland, so not taxable. When the copying machine came and the deliverer paid the importation VAT on the border, then paragraph 1.1 number 1, however, did apply, and because paragraph 3.8, a special rule, says, okay, in way of derogation from 3.6, now the place of delivery is in the German inland, so the matter is taxable, and so yeah, tax must be paid. And the third case, surprise, surprise, was not an import at all, because an importation requires that the good in question crosses the border, and here only the parts which were needed to produce the machine crossed the border, but nothing else. Not the final product. The final product was first produced in Munich on the spot, and it remained there. So this was only something which seemed, for beginners, which seemed to be an importation on the first glance, but in reality the good which was sold was not imported. So this was a regular inland case, and the rules to solve it were the regular rules which always apply. That was, I admit, well, rather bad trick, but I think you should know that trick. And that is why I put number 3 on the list. That underlines how important it always is when it is a case where a good is sold to determine where does the movement of that good begins and ends. And here that is, begins at Munich, ends at Munich. You remember that old thumb rule, which is nowhere explicitly written, but which is common sense. The movement of a good towards the customer can never begin before that good exists. That is the solution and the main the main reason for our solution of number 3. Now, it is my part again to thank you for watching. It would be nice if you like the video. It would be even nicer if you recommend the channel and the video to others. And the most important thing is come back and watch next videos whenever you have time. It would be great to see you again. Until then, goodbye and thanks for watching.